There are simply some keywords that you need to be familiar with to pass questions on ratio analysis. When you are hearing margin, turnover, and the like, you need to familiarize, and because if you are not familiarized with it, oftentimes you find it difficult to determine which one should be the numerator and which one should be the denominator concerning ratio analysis questions. Hello everybody, Gbenga Olatunji FCA here, welcoming you to Teachings Associate channel. We've introduced ourselves already to ratio analysis and financial techniques. Today is all about calculation. We want to calculate ratio analysis, especially as it relates to the question that we'll be able to project. There are various techniques in financial analysis which we are already familiarized with, like ratio analysis, which is very popular, cash flow analysis a bit popular too, trend analysis, common size analysis, and comparative financial statement, just like IAS 1 in compliance. Also, we've spoken about types of accounting ratios, recovery ratio, component ratio, turnover ratio, and return ratio. Profitability ratio, actually we are going to be looking at it now, how to calculate a bit of it. But apart from profitability ratio, some other ratios that could be calculated are efficiency or activity ratio, solvency ratio or debt ratio, leverage ratio, investment ratio, and liquidity ratio. Now this is the question that we will be using today. I hope you can see it very clearly. If possible, you can take a bit of snapshot of it, even though I'll try to project it. Oftentimes many people are like, Gbenga, you've not been dealing with questions. Actually, it's all about going electronic, and to project electronically and the like may be a bit of both. We thank God we are making progress in it. So we are going to be calculating today, especially on profitability ratio. You see, and you know what? Passing ratio analysis, there are some keywords that we need to familiarize ourselves with. And if we are not familiarized with those keywords, at the end of the day, it could be an issue because we may not know what should be our numerator and what should be our denominator in the calculation of the ratio. That is why we need to familiarize. And I'm telling you now, anytime you hear margin, 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 know that your sales figure will be the denominator. Should I come again slowly? Margin, anytime you hear gross profit margin, net profit margin, anything margin, know that is in comparative to your sales. So your denominator is going to be sales figure. Please don't forget this. As we continue, I'll be telling you more about familiarizing and making it easy for us not to be confused about, so what should be our denominator or our numerator. Having said that, Temtem Limited statement of comprehensive income is projected for the year 2080. Can you imagine? 2080. Yeah, well, of course, we are going to be given a comparative figure. Don't forget, part of technique of analyzing financial statements is trend analysis too, or comparative statement. So at least we must have 2 years to compare with. Now, our turnover has been given, cost of sales has been given, gross profit and the like has been given, just as you can see, so that we will not waste time. We want to calculate. We are going to, by reason of the question, we will be able to calculate gross profit margin, net profit margin, operating expense ratio. Let me quickly talk about net profit margin. When we are talking about net profit margin, it could be on so many things. Like we can have net profit before tax, net profit after tax, net profit before interest and tax. If the question is silent on it, it's advisable that you go with net profit after tax, especially after tax and interest. Having said that, let's begin to calculate. So this is our board that we will be using to calculate. So when writing exams, don't forget to put the name of the organization you are to answer the question on, which is Temtem Limited in our home case now. Now we want to calculate gross profit margin. Gross profit margin. Don't forget, I told you anytime you hear margin, it symbolizes your denominator is going to be sales figure. So for the year we want to look at, our sales figure will be what? Let me quickly project for 79. Our sales figure will be 349. So we have our 349 now. And our gross profit will be this our gross profit, and this are sales. This are gross profit, this are sales. So for 79, it will be 134,480 over 349, 200. And for year 2080, it will be 163 over 411, 590. So let's calculate for 2080. Year 2080. Calculation for year 2080 now. So we have our gross profit. Gross profit divided by the sales. Of course, is going to be in percentage. So our gross profit will now be 163,730 divided by our sales, which is our margin, 411, 590. Are we together, please? Then it's going to be in percentage. So everything we get here now multiplied by 100 in percent. So if you calculate it like I do, you should be having 39.7%. That is what you should be having. Are you calculating it? That's for year 2080. You can try it for year 2079. So this is how to go about our gross profit margin. Now net profit margin. For our net profit margin, okay, this is the slide again. Our net profit margin, please. Let's put net here now. Net profit margin, same for Temtem Limited, same for year 28. So I told us it could be net profit before tax, net profit after tax, net profit before interest and tax. Which one do you suggest we should use? Which one do you suggest we should use? Let's do net profit before tax. Net profit before tax. So that means we are going to have our 49 on 144.11 net profit before tax. So net profit before tax. So that's how to calculate our net profit margin. So we need to use a net profit before tax. Okay, having said that, so we have 49. Let me project the question a bit too. We have 49 920 divided by our margin for the year, which is 411 590. I'm going to leave the other year for us to try and do. Don't forget, everything will be multiplied by the percentage to bring it into 100%. Then we close up this. This is to manage our virtual space anyway. So what will be our answer? We should get 12.1% as our answer. We should get 12.1% for our answer. Likewise, also we can go by to calculate operating expense ratio. Operating expense ratio. And if we are to do that, these are operating expense. The distribution expense, admin expense for 2080 for 2079. These are operating expense in this question now. So what we need to do is to add up 66 and 46 admin expense and distribution expense for us to get our operating expense. Then we put it all over our turnover. Don't forget, we are calculating margins now. So can we go back to our virtual board? I clean this off now. So if we had the two figures together, what we want to calculate now is our operating expense ratio. Operating expense ratio. So we had 66 and 46 together. We should be having 112,310 over divided by our sales, which is 411. Don't forget the year that we are dealing with, while you can deal with the second year having understood what we've done. So this is our ratio now, the operating expense over our sales, that is our margin, all in brackets. We are putting it in brackets now because of the virtual that we are using, virtual screen. So multiplied by 100. It must always be in percentage. So what's our figure? Figure Masha, what do you get there? 27.29 should be our answer if we calculate it very well. So this is how to calculate our operating expense. By virtue of this question that we've tried to calculate gross profit margin, net profit margin, and our operating expense ratio. Next time we are going to be looking at rows like return on capital employed and the like, using another hypothetical example and hypothetical question. From James Associate Channel, Gbenga Olatunji FC has been speaking. Don't forget to subscribe if you are yet to subscribe, and share to other friends around you. Share on Facebook, TikTok, and the like. You're free to share it, please. We are value to life. We are value to your businesses. Next, we'll be looking at other important ratios using another hypothetical questions.